Welcome to the EIFN Currency Market Weekly Update. I'm your host, Zara James, and here are the headlines making waves this week and what they mean for the week ahead. In the headlines, trade tensions escalate, US and China exchange heavy tariffs, rattling global markets. Global capital shift, investors flee the US dollar for safer and more stable havens. Central banks diverge. The Fed stands still, BOE cuts, while Japan hits pause. Eyes on inflation, US CPI and UK jobs data to drive next week's currency plays. We'll be back with news in detail and economic calendar events of the week.
Hi, I'm Brandon Wells from Expozive Info, and I am an example of a newscast you can get with your branded newscasts. They are fully customizable and inexpensive. You get branded studio and ticker, your own unique newscast, unique theme and background music, unique script delivered in full screen, vertical short and audio formats. If you're interested in sponsoring these videos or would like your own customized newscasts, contact us at hello@expozive.com.
Scratch the surface, dig deeper, break through.
Welcome back. Here is the news. Our top story: US-China tariff escalation continues to stoke volatility. The currency markets took a sharp turn this week as Washington slapped a sweeping 145% tariff on Chinese goods. Beijing swiftly responded with a 125% tariff on US imports. These moves reignited fears of a prolonged trade war, sending ripples across the forex landscape. Negotiations have begun in Switzerland, but expectations for progress remain modest. Until clearer resolution emerges, risk aversion may dominate markets, with safe haven flows into the US dollar and Japanese yen likely to persist, albeit with caution. Capital exodus from the dollar. In a notable shift, institutional investors are retreating from US dollar-denominated assets. Concerns over erratic trade policy and looming economic headwinds have prompted reallocations toward European and other more stable markets at divergent paths. While the Federal Reserve held rates steady in its May 7th meeting, Chair Jerome Powell's remarks highlighted uncertainties, particularly those stemming from trade disruptions. The markets still anticipate potential cuts later in the year, depending on inflation data and growth metrics. Across the Atlantic, the Bank of England cut its key interest rate, but with a caveat. Governor Bailey's language suggested it was a hawkish cut, signaling caution rather than dovishness. This initially buoyed the pound, though broader dollar strength later forced GBP/USD below the 1.3200 level. Meanwhile, the Bank of Japan paused its tightening cycle and downgraded its economic outlook. The yen weakened modestly, with USD per JPY climbing toward the 145 mark, prompting speculation of possible intervention. ECB flags inflation worries amid political shifts. The European Central Bank's Isabel Schnabel cautioned that global protectionism and rising defense expenditure could keep inflation stubbornly high. This casts doubt on the market's assumption of further ECB rate cuts, even as retail sales data hint at underlying weakness. EUR per USD traded within a narrow range this week, but direction in the coming days may hinge on Eurozone GDP and ECB speakers scheduled for May 15th. Coming up, what to look out for in the coming week.
Hi, I'm Brandon Wells from Expozive Info, and I am an example of a newscast you can get with your branded newscasts. They are fully customizable and inexpensive. You get branded studio and ticker, your own unique newscast, unique theme and background music, unique script delivered in full screen, vertical short and audio formats. If you're interested in sponsoring these videos or would like your own customized newscasts, contact us at hello@expozive.com.
Scratch the surface, dig deeper, break through.
Welcome back. I'm Zara James at EIFN. So, what can we expect in the week ahead? The focus will remain squarely on trade developments, particularly any news from the ongoing US-China discussions. Any signs of progress could significantly lift market sentiment, while a lack of it could see a return to more cautious trading. This week is also packed with market-moving economic releases that could significantly shift currency pairs. US inflation in focus, Tuesday and Thursday, top of the list, US CPI on Tuesday. It's forecast to rise by 0.3% month-on-month, with core CPI steady at 2.8% annually. Traders will be watching closely for any signs that tariffs are already pushing prices higher. Then on Thursday, we get a deluge: producer price index, retail sales, jobless claims, and manufacturing activity. Strong prints could give the dollar a further lift, especially if they signal the Fed needs to stay higher for longer. UK jobs and growth, Tuesday and Tuesday, brings wage and employment data, while Thursday features GDP for Q1. The pound remains sensitive to downside surprises, particularly after last week's rate cut. If earnings are soft or growth contracts, we could see GBP USD drift towards the 1.2350 handle, Eurozone GDP. Thursday. The Euro's path will be shaped by Thursday's GDP release. A modest 0.2% quarterly rise is expected. Anything weaker could reinforce calls for a June rate cut from the ECB and weigh on the euro. This is the wrap-up. It's a week for data watchers. US inflation and UK wages will set the tone. Meanwhile, keep an eye on USD/JPY. If it nears 160 again, Tokyo may step in. From Washington to Frankfurt and Beijing to Sydney, every data point and every speech could shift the tone. So, whether you're trading the majors or watching the crosses, stay nimble and stay informed. This is Zara James, signing off from EIFN. Until next time, mind your stops.